gang. This is Marie Lundi, your trusted real estate partner. And today I am so excited. I have with me one of my favorite lending partners, Ms. Williams from Kearny Bank is here with us today. And I got to tell you, I have known Jewel for many, many years. And over the years, we have helped so many buyers secure their home, right? Whether they were first-time home buyers, move-up buyers, downsizers, investors, Jewel does it all, right? And the good thing with Jewel is that she is one of the most trustworthy, most reliable, and knowledgeable individuals that I know in this business. So I'm really excited to have her on board. Hi there, Jewel. How are you today?
Hi, Marie. Thank you so much for that lovely introduction. I mean, I can only say everything Marie has said is the same for her. She has been she is reliable, informative, and just a wonderful person to work with. I mean, the customers that we have done together have honestly appreciated everything you've done. And I just want to say thank you for what you add to the community.
Oh, thank you so much, Jules. And once again, it's an honor to have you here because you are so knowledgeable about the business and your customer care is through the roof. So it's always a pleasure working with you.
Thank you.
So I just had a couple of questions for you, Joel. But before we get started, I just wanted to get your perspective on, why do you think that home ownership, right, is so important today?
Yeah, that's a great question, Marie, and thanks for asking. Home ownership is just exactly what it says. Owning your own home, owning your own space, owning your own lifestyle, right? When you get home, owning your own peace, owning your own style. Consider a landlord, for example. Its Lord is attached to his name. He masters or rules over what you do in your private space.
Right.
He rules over whether or not you're going to be able to paint your rooms a certain color, right? Or if the children are too active, you get those complaints. He gets to dictate if your rent will go up each year to satisfy his own personal wealth, right?
Absolutely.
So freedom is one of the reasons why it's so important. Not only freedom to be yourself, to provide for your family, to set the example for your family, it's also the freedom to build your personal wealth.
Absolutely. And let's talk about that, right? So building personal wealth and also transferring that to the next generation, right? As a homeowner, if you do have children or nieces or any young person in the community, right, they get to learn from you, right?
Exactly.
A lot of the things we learn is by what we see. So as a parent or an aunt, an uncle, or someone established in the community, if the younger generation sees that we're buying property and we own property, even subconsciously, right? That's
absolutely. Yes. And that's the example that you want to give and the legacy that you want to leave. And if you don't have someone to leave it to, it's your retirement.
Absolutely.
Right? Another way to save for your retirement. Your 401k goes up and down, right? At least, even though the real estate market also fluctuates, you're still nevertheless going to get at least what you put back in it, right?
Absolutely.
So it's a great way to build wealth. It's a great way to express the exampleship before your family members, and it's a great way just to simply live and be yourself. Right?
Absolutely. You get your own space, you get to be yourself, you get to transfer the knowledge. Of what it means, all of the terms, what it takes to buy a property. We get to pass that on to the next generation and to people in the community. And Jewel, you're 100% right. It is a great long-term investment.
Yes, right? Absolutely.
It's a long-term investment. And unlike buying, let's say, a stock, right?
Yes.
You get to enjoy it. You get to live in it, right?
Yeah,
Like when you
absolutely. Right. And you get to
when you
enjoy
buy
your,
into yeah, when you buy a stock, it's a great investment. But with a home, it's an investment plus you get to live
plus.
in it and enjoy it, right? And create memories.
Exactly, exactly. And that's why it's pretty much the American dream because it's the
Absolutely.
freedom to enjoy your backyard, it's the
Yes,
freedom to enjoy your community, the freedom to build your wealth. That is what being an American is about, right? Because
absolutely.
a lot of countries live with borders, right?
Yes, correct.
And
Correct.
so here you actually, and sometimes you can't cross from being in one class of no ownership to another level.
Good point.
You get to do that here. And that's
Absolutely.
the freedom that home ownership allows you to do. And you just have to experience it and show it to your family so that they too can desire it and see that it's possible.
Absolutely. So very well said. It's an opportunity that we get to experience here,
Yeah.
and also get a chance to pass it on to people in our communities and our children. So it's a good thing and it's part of freedom, which is wonderful.
Yeah,
So
absolutely.
very well said. And so can you tell me, Joel, what are some of the questions that you hear from today's buyers?
Yeah, so that's a great question, Marie, because so many people, when they come to a lender, they are looking for how much can I afford?
Right.
And the truth is, they have an idea in their minds, but it is very important to learn what the banks are willing to lend, what their guidelines are, and what their policies are. Just like any other job, there are guidelines, there are policies. So it's always good to have a consultation, talk with the lender, figure out your budget, right? So when I think of a budget, we're thinking of what the monthly expense will be, right? Which will determine how much you can afford based on your income, your employment history, your credit, as well as how much money you're going to put down. That's one of the major questions. And when we are talking about it, the client and myself, we're really looking at what's sustainable,
Yes.
right?
Important.
Because it's a long-term investment. So we just can't plan for now. We have to consider by the right programs that we're suggesting and talking about, such as a fixed rate versus an adjustable rate. How long will this payment, be sustainable? 1 year,
Right.
3 years, 5 years. These are the important things that we try to go over. When it comes down to down payment and assets, people really need to understand as well how far their money can go. How far can it take me? Where can it, how much do I need to put down? How much do I need to close? These are some of the common questions that we try to answer for customers.
No, absolutely, especially for a first-time home buyer, right, who may not have any type of knowledge or maybe have seen a few things online, right?
Yeah,
It's really important to have a thorough consultation, as you said, before you even get started with the home buying process, and
exactly.
when I get those calls from any buyers, right, even if you have purchased properties over the past years, right? The
Yes,
industry
yes.
changes all the time, right,
All the
Joel?
time. Yes,
All the
yes.
time. So even if you bought property in the past, I always recommend that one of the first persons that you should speak with is a trusted lender, right?
Absolutely. Yes, yes.
To go over exactly what you said, to go over your finances, your FICO score, your down payment, your closing costs, right? Everything
Yes.
that's entailed, because you don't want any surprises.
You don't want any surprises. And I like clients to be as honest with me, treat me like a sister or a friend,
Right.
right? Because I'm actually your advocate. I'm going to help you. I do work for the bank, but my goal is to make sure that you are informed, understand, and know how to navigate the process that you're not so familiar with, right? That's where the expertise
Absolutely.
come in. The other thing that clients ask a lot is, what is your interest rate?
Ah, yes. Let's talk about that.
Yeah, so that's a big question because as we had seen in 22, right? Amazing that we're now in 23, right? Happy New Year's to everyone. Clients will ask, what is your interest rate?
Right.
So that's a real important question that we answer as well. And as you know, interest rates, they tend to fluctuate, right? But what people may not know is that interest rates are based on your credit score, the loan to value, which means how much money are you borrowing against the value of the house? That's the loan to value. Other factors like the loan amount, the
Yes,
type of property that you're buying. All of these are called like risk factors that will determine what the interest rate is.
I see.
So that's a real important question that I like to go over with clients as well,
Which
because the
makes
interest rate impacts the payment.
absolutely. And as you and I know, Joel, today's buyers or any buyer, whether you're buying a house, a car, or any large ticket item, most people tend to focus on the monthly payment, right? Like when you buy a
Absolutely,
car,
yes.
right? People kind of delve in, can I afford that price on a monthly basis, right? So
Yes.
you're 100% right. The mortgage rate has a direct correlation with what you're paying per month, right? So it's such a key
Yes.
factor. And I'm glad that you've mentioned also that, the interest rate is going to vary based on the individual's financial situation, right? A lot
Absolutely.
of,
Yes.
right?
Yes.
A lot of buyers come to us having one interest rate in mind because that's what they're seeing being advertised, right?
Yes.
But
Yes.
it doesn't necessarily mean that it's going to be their interest rate because, as you mentioned, Joel, there's so many variables that could influence that.
Absolutely. Whether it's investment property, a
Right.
primary residence. And again, the credit score is really a big dictator or indicator of what
Correct.
kind of interest rate you can end up with as well.
Absolutely. And I know that in your case, Joel, you also have some programs with Kearny Bank.
Yes,
For
yes,
qualifying buyers, we got to say that for qualifying buyers, that those rates are sometimes even lower than what the prevailing rate is. But once again, I'm going to
absolutely.
say it has to be, you have to have a unique situation to qualify for those rates. So Joe, I
Mhm.
just wanted to point out, depending on the program also, right, the rate can be
Right.
completely
The program makes a difference
right.
because as a community bank, we get to offer a first-time home buyer program where we're reinvesting into the community. So whereby we would have a lower interest rate as well as pay the PMI. Now, PMI is a real big factor when a person is putting less than 20% down on a conventional loan. So this can take up like 120, $200, $300 of their monthly payment. So to have that eliminated in your first time home buyer program is a big savings for a lot of customers. So again, it helps to answer the question, how much can I afford, right? The
Absolutely.
interest rate matters, the program matters, right? What kind of program? And keep in mind that we are trying to tailor the program to the profile. Each person has their own unique profile. So
Got
what may suit Jane may not suit Janet, right?
got it.
So we really personalize it. And I think customers have to come in with that understanding that I'm unique, my situation is unique. Is there something that can work with me and help me to reach my home financing goals?
Absolutely. And going back to what you said earlier, Jules, that's why it's sort of critical for them to meet with you as soon as
Yes,
possible, right?
yes,
So that you can find the best product that meets their scenario, right?
yes.
And you could kind of coach them on what to get, right? As
Yep,
opposed
that
to getting right, as opposed to you getting that call when they're making an offer. It's like, wait a
we're
second,
already in the contract, right? And you have to
God
try
forbid, right?
to, and we welcome everything because
No,
we're
of
here to
course.
help, of
That's
course. But it's always good to be well informed,
correct.
right? So that they can make the best decision for themselves. I mean, it's a financial decision, it's emotional,
Yes.
right? It
Right.
touches not just your life, but it can touch other people's lives that are depending upon you or circle with you. So it's really important to get the right information, the right assistance, so that you can make the final decision, right? I don't hold back. I try to tell the truth because being truthful is kind.
Absolutely. And that's one of the things I like about you, Jewel. You
Mhm.
know, you're so honest. You and I, we work the same way,
Right,
right?
exactly. I was going to say the same.
Yeah, we're here to serve, and
Yes,
we're here to educate and give you options as a home buyer, right? And
yes,
if it's not a good match, what we have to offer is not a good match, and I've seen that in your case.
yes,
You know what?
absolutely.
Maybe you should shop, in this other place because
Yes,
you may find a better product, right? So you're
yes,
100% honest, and at the end of the day, it's all about helping,
yes,
people, right? So that's one of the things
yes.
I appreciate about you.
And likewise, Marie.
Thank you, thank you.
Yes.
And so, Jill, what are some of the common misnomers that you're hearing from today's buyers out there?
Well, the common one, and surprisingly still is to this day, is a lot of people believe they still need 20% to
Right.
purchase a home. And you don't need 20%. There are a lot of programs that allow you to put less money down,
Right.
still not have PMI, right?
That's key.
That's key. Or you could put less down and the PMI may not be as expensive,
I see.
right? Because in today's times, some people prefer to be more liquid
Absolutely.
after closing, right? To where $70 versus giving up another $15,000, it may make better sense to hold on to the 15,000 and pay the $70 knowing it will go away in the
Right.
next 5 to 7 years. So again, back to when I'm speaking with a customer, we're trying to figure out the right path, what
Right.
makes best sense for them in their
Correct.
situation and what they need. Because, I hear a lot of times from customers, I don't want to be house broke, right?
Right.
So we hear that a lot. We don't want to be house broke, but in the same token, and not to object to that thought, the idea is let's just find out what is the best program for you, what works best, how you can still save and accumulate, right? That
Yeah.
which you've invested, right? So, yes.
Absolutely. So yes, I'm glad you brought that myth. It's such a common myth. Unfortunately, a lot of buyers or people that would qualify to buy a home today, they have in their mind that they need 20%. And that's
Yes,
stopping them from moving forward. And that is really unfortunate. And, like you, I'm here to dispel that myth. It's a myth.
it's a myth.
There's
Yeah, exactly. Yes. And the thing is, because what has to be also understood is that going back to it's about the payment,
correct.
right? So
Exactly.
even if you're putting 10% down, the payment can still be very affordable.
That's the thing.
So why hold off when
Right.
the house prices may continue to climb? So that
Absolutely.
the additional money you're saving for is only going to be lost in the additional price cost or the higher interest rate. So I think when speaking with a customer, they also have to understand that everything has a opportunity is unique.
Yes, for sure.
We want to get rid of that you need 20%. We want to focus on payment. If the
Correct.
payment's affordable, is does it still fall within your budget, right? Then
Absolutely.
let's see if it's something that you would like to proceed with. Another thing that is pretty common as well is everyone thinks FHA is the first time home buyer program.
Right.
Well, FHA is not the first time home buyer program.
I'm glad
Okay.
you're saying it.
Right? It is a government insured program that allows buyers that need expansion and guidelines such as lower credit scores, higher debt to income ratios, things of that nature. But it is not the first time home buyer program. You
There you
can
go.
buy a house with FHA, sell the house, and buy another house with FHA. So you don't have to be a first time home buyer. That dispels that is not a first time home buyer program. They have so many other programs today, which are also on the conventional side that are for first time home buyers. As I stated, 3% down on single families,
Hmm.
right? You could do 5% down on single families and two families, and
Wow.
still, depending upon property eligibility, right? And still have no PMI paid.
Wow.
Whereas with the FHA, you will still experience mortgage insurance premium. So I try to explore all the options with the clients, make sure they fully understand. No matter what, make the decision for yourself, but get the knowledge, right?
Absolutely, get the knowledge. And once again, that is a common myth that I hear all the time, right? That FHA is solely for first-time home buyers, right?
Right.
And that is a myth.
A
And
myth,
so,
exactly.
so glad that you're mentioning that.
Mhm.
Absolutely. And
Yeah.
so, as we're kind of wrapping up with this conversation, which is very informative, 2022 has been defined by the inflation rate, as well
Yes.
as the fast-paced rise of mortgage rate, right? I remember
Yes. Yes.
starting off 2022 in the low threes, and the rates doubled over the past
Yes.
year. And so clearly none of us have a crystal ball, and we cannot forecast the future, but wanted to hear your thoughts on where you think mortgage rates are heading going into this new year.
Well, according to a lot of the economists and also different financial advisors,
Right.
the Fed is likely to go up in this quarter,
Got it.
right, as they continue to challenge the inflation. The good news is that they have, been able to pull back some of the money out of the system, right? And what
Okay.
I mean by that is inflation is pretty much too much money is printed. So
Right.
it devalues the money. So they need to pull the money back out of this, out of the major population, you
Right.
know, and that's why prices go up. We can all tell by our grocery bills that they've been
Yes, for
getting
sure.
their share
Absolutely.
of all that they need. So, with
Yes.
that said, the interest rate increase has helped. So, I do agree with a lot of the economists that I've listened to, even Lawrence, the Realtor National president. I do believe that rates will go down part of the second half of the year.
Got it. Okay.
And
So,
so they're looking, and a lot of people are predicting that they will settle somewhere around the 5.5 by the end of next year.
okay.
Hmm.
So what I'm hearing, and once again, this is not us, looking
Right,
to
exactly.
forecast the future, but based on what economists are saying, the forecast is that for the first quarter, rates may continue to go up, but the latter part of the year, mortgage rates will kind of decline. That's the
Yeah.
overall feeling, more or less.
Yeah, because keep in mind when the Fed goes up, and that's what I really was referring to, the
Got
Fed.
it.
When the Fed goes up, it does affect short-term mortgage loans
Got it.
or short-term loans like credit cards, car loans, those
Absolutely.
type of things. The mortgage company sometimes build in
You're
all
right.
that speculation ahead of time.
Got
So rates may stay pretty much around where they are currently.
got
They
it.
may fluctuate up and down a half a point,
Got it.
but eventually you'll start seeing a trend of them coming down or going down in maybe the second quarter towards and then leading into the latter part of the year. So that's the speculation that's in the market right now. So we're hoping that they're right,
Yeah.
right? Lower rates mean lower payments, right? They also say sometimes about the housing market, right, that there's going to be about a 13% decrease in the pricing, right?
Right, depending on the location and the town, right?
Depending on location. Yep.
Right, absolutely. But just to put things into perspective, because I know a lot of buyers started with the process over the past couple of years when mortgage rates were in the threes, the
Yeah.
fours, and that's
Hmm.
all they know. That's all they know.
Yes.
And they feel that they've missed out on an opportunity. But putting things into context, right? For
Yes.
people that have been around for a while, they've seen rates, in the 80s, the 90s, double digits,
Double
right?
digits,
Double
absolutely.
digits, right? So in the context, in the grand scheme of things, you know, a rate that is anywhere in the 6s or 7s, even, that's still
a reasonable rate considering, yes.
Considering, right? So I just want to put things
Absolutely.
into perspective, because a lot of the buyers that I meet, you know, just started with the process, you know, and they feel that they've missed out. You know, it was an anomaly what took place
Right.
over the past 2 years. It was an anomaly. It's not the norm. So
Yes.
we're moving towards a normal balanced market at this point.
Right. And, you know, with that perspective, we have to remember that the economy had gone through a great recession from 2008. And this was really still a part of the recovery, right?
Got it.
With,
Yeah.
you know, because sometimes you put too much money in to restore, and you have unintended consequences, which could have ended up with some inflation.
Yes, for sure.
Right? So they're still balancing out that piece to get us to a more normal pre-Great Recession kind of interest rates where they were at that time in the 6s.
Got it, which makes sense.
Right? So, and, you know, we want a healthy economy, but what I would say to first-time home buyers or people who are buying, to remember that it's an investment.
Correct.
Right? That offers you the freedom.
Yes.
Right? Whether your freedom is to have your own backyard, your own lifestyle, the way you choose it without having a lord over you, right?
Correct. Absolutely.
Or financial wealth, legacy.
Absolutely.
Whatever that is and whatever it will mean to you, the purchase, the opportunity is always in the present. It's never the past. It's not even the future. It's always the present, because that's really all we have to work with. And as we make those decisions, as time continues, we get to make another decision. If we need to sell, refinance, right, for a lower rate, a lower term, or cash out, right, from the equity that's in our homes, so that we do something else, send our children to college, or just add more to the house because we're going to bring our parents to live with us.
Correct.
Everything is the present. It's, you know, so try not to get too stuck in the past of, right? Because opportunities always are now. That's how I see it anyway.
Absolutely, Jewel. I think that is very well said. You know, opportunities are always in the now, right? Yeah. So let's just focus on that. So, you know, I could not have said it any better. I think it's a great way to wrap up this fantastic conversation. Yes. And thank you so much, Joel, for sharing all of your knowledge, you know, through this conversation. And I know that a lot of buyers and many of my real estate friends are watching this video, and I'm sure that they want to know how to get a hold of you, right? And once again, your information will be listed below, but what is your preference in terms of how people contact you?
So actually, I'm open to all three, to be honest with you. So you can email me. My cell phone is my business phone. Call me anytime. I keep my phone with me. So that's the best way to, yeah. So that is actually the best way to reach me. But I also have my emails to my phone. So I'm accessible. Yes.
And so Joel, thanks you once again for giving us part of your time today and sharing all of this knowledge. I certainly look forward to working with you moving forward.
Thank you so much, Marie, for everything. Love you much.
Likewise. Thank you.
Bye-bye.
Bye-bye.